I want to start with the session by a few stats. So recently, I think there were stats that India has covered, majority of FNO volume, around 80% globally, and in September the volume grew by 7% month in month. It's growing a lot. Before we dive into a bit of crypto trading, I want to understand what is the psyche of Indian retail investors that's driving craze in equity market around this.
Hello. Yeah. So I think post-COVID, I think this trend has really started after 2020. A lot of people are seeing trading as their own day-to-day job, right? Earlier it used to be part-time. There'll be some professional people, like thousands of people who are trading, and there'll be like 99% of the people just investing in stocks or through mutual funds. But post-COVID, I think after this work from home and everything, a lot of people found a lot of time and they started professionally trading, right? That became their primary activity for a lot of these people. And the way FNO works, right? Especially this call options and all those things, right? You can make money on a day-to-day basis, right? You don't have to wait for a week or a month. Earlier, people used to do it in intraday. Then they found this is much more lucrative, right? Higher risk, higher volatility. So I think, and a lot of trading academies also have mushroomed, which are giving this kind of communication that everyone can be a trader. I think that has really contributed to this whole wave. And I think we are also having a 4 year of bull run in the equity market, right? Whatever started in 2020, it's still going strong. Probably we just saw some correction this month. But I think because of this, a lot of people are also much more confident trading in equity, especially in FNO.
Avinash, what do you think about it?
Yeah, I think two things. One is, as I think he covered, that education is really increasing, basically. I mean, there are lots of online courses, offline courses on trading, and people are really going for that. Another trend which I have seen is that there is a concept of, let's say, when you trade with someone else's capital. Okay, that also I have seen, especially in the equity market. You get funds from somewhere and you trade on their behalf, so to say, with some commission structure. So that is also in last few years is growing a lot.
Do you think this trend of both trading in equity and trading in equity FNO has translated well into just crypto trading market before you even touch FNOs? Have you seen some positive signs around crypto trading given we've seen issues with exchanges like WazirX, there have been regulation problems. What has been your observation in general crypto trading?
So what I've seen is that basically I think there are two steps. I don't think people are directly coming from equity to, let's say, F&O in crypto. They come into crypto and then from crypto to crypto F&O. So it's more of a two-step process there. Obviously, if they have experience in equity F&O, that helps. But I think that first stage, more and more people, and you said that taxation is one part, obviously. If you remember, after the taxation, the spot volume went down by 90%, 95%. Okay. With F&O coming in crypto, that has seen like some positive development there, that the volumes are going up for crypto exchanges, basically. So taxation is one part. But yeah, at the same time, more and more people are migrating or like educating themselves from doing mainly crypto to coming to F&O side.
Arjun, he talked about transitioning from no one transitions possibly from equity FNO to direct crypto FNO. Can you talk to me about journey? Say if I'm a consumer, I'm trading in equity FNO, I might have some knowledge, or I'm just trading in crypto. If I want to jump to crypto FNO, what kind of education that I would need, and what kind of education that as a platform that you need to impart in potential opportunists who might be looking to trade in crypto FNO?
Okay. See, I think the biggest problem I would also see is that when people start taking risk, they don't stay at level 1 or level 2. They want 100x leverage, right? And they don't want to trade in the top 10 assets, Bitcoin, Ethereum. They want to trade in this 50th or like 100th meme coin, right? Because they don't want to wait for such time, right? So either they are extremely conservative, they don't touch crypto, they don't touch FNO, or when they come in, they want to take the highest risk. It is like there is a scene from a Tamil movie where people say, The first question, if you answer 1,000 rupees. Second question, it's 2,000. 15th question, if you answer 1 crore. So the guy says, give me the 15th question directly, right? He doesn't want to go to that 3 steps, right? So from exchange perspective, the biggest, say, one thing is you need to offer those leverages. Because if you don't offer the leverage, someone else offers, people just compare and then they go there, right? You need to offer those choices, but how do you nudge them to be much more responsible, right? How do they understand risk, right? So what is happening with crypto space, especially, is that a lot of things that happened in equity market, it's happening in much more faster pace. It's much more compressed. You might see 20% stock movement over 2-3 months, and you'll be extremely happy in the equity market, right? Here you need that to happen in 2-3 days for people to be happy, right? So the volatility is higher. So the losses and the gains are also much more higher, and it's also a 24/7 market, right? Unlike equity where you can shut your terminal at 3 o'clock. So for some people, this is an extremely good thing, right? They want to trade more. So for them, there is a natural product market fit. But for some people, they are not able to like sleep even peacefully, right? Because their positions are open, they are like anxious. So of course, lot of learnings from the equity market can be, end of the day, trading is trading, right? Most of the people who trade, they don't care about the underlying asset also, right? They just look at the prices and they're saying, okay, I'm going to make so much money. They're not going to use the underlying product at all. So whatever learning you have in equity can definitely be translated here, but people need to be a little bit more careful because you're not operating in the street, you are operating in the highway, right? So you can get bulldozed pretty fast, you can make huge amount of money in a short span of time, you can lose a lot of money in the short span of time. So that is where I think the key challenges are for the customer.
Avinash, before I come to the volatility point, I wanted to ask, I mean, I'm a consumer tech reporter. What I see is a lot of buttons, a lot of features, a lot of design elements. When you're designing your exchange, you obviously want to make it easier for people to get into futures and options. But obviously there's a lot of risk. There is an education curve, like you said. I mean, you can't possibly send the customer who's coming to say, hey, go and watch a YouTube video and come back to us, then trade. Most probably they won't come back. How do you balance between the easiness of trading but also creating enough friction that they are educated or they understand the risk involved, apart from, say, saying pop-ups or sub-risk market investment risks are involved and things like that. We have seen in ads which is spoken in 2-3 seconds. How do you kind of balance between that?
So basically, I think what we do is, some traditional ways which you said, that videos and some kind of pop-up saying it's risky and all that. Okay, that is one part of it. Second part, the how we have built over a period of time is that we started with only 10x to 20x leverage. We didn't start with 100. Okay, even now we don't have 100x leverage. And what we did was that slowly we increased that leverage when the customer became more and more comfortable. Even today, the kind of profile which we have, the customer profile, that if you have large investments and you want to invest for a longer period of time, then generally I've seen customer takes very less leverage, maybe 3 times, 4 times, 5 times. Okay, and if you have like a short amount of capital, and then what they do is that obviously they take like 50x leverage, close the trade in few hours, so to say. Okay, so we see all the things. I mean, we still have, for example, people, we started in February. We still have people who opened their trade in February, March, and they're still maintaining those trades. They have not closed those positions. So I think as an industry, as a company, what we are trying to do is that we are trying to limit, or we're trying to educate on the leverage part most. Okay, if you have smaller amount of leverage, you are much more safer. If you are like 75x, 100x leverage, you are much more, risk of capital is much more there. So that's what we are focusing on basically.
What is the opportunity that you see in growth in terms of FNO? I mean, equity FNO has kind of ballooned a lot. Do you think, the earlier point that we talked about, that some of the trading in crypto FNO might be just restricted to people who are already trading crypto. What kind of trends do you see in terms of both user profiles and people who are coming to trade crypto FNO? What kind of opportunities do you see there?
I think there are two things, right? One is the natural product market fit, right? There are people who want to do this, right? They get a thrill when they do this and they want to do it, right? That is one part. The second part is like we already discussed, the taxation. Like how in cars, the design is being not designed by the company, but by the taxes, right? You have a sub 4-meter car, you will have certain taxes. So you have most of the cars designed at 3.99 or 3.98 meters. So here also a lot of last 2 years of changes, especially in the Indian ecosystem, has happened because of the taxation, right? Because there is one part where there is TDS and there is another part where there is low TDS, right? So it's natural for people to move towards this, right? But side by side, we also see technically if you look at it, if you are in spot, right? If you had bought Bitcoin in the last 14 years, at any point, 99.99% it should be in profit, right? Unless you had traded, right? You could have bought at a lower, you would ideally want to buy at a lower price, sell at a higher price, but that typically doesn't happen. But if we assume like 50% of the people are losing money, but technically it is like 70% of the, or 80% of the traders lose money, right? You could have been better off, right? So in F&O, that is even more skewed, right? You are in crypto bull run, right? Technically, there are ways to make profit at a zero risk, right? Just by holding spot, right? But people are going for leverage. They want to increase that part, and it's a kind of zero-sum game, right? Either you are right or the person who is opposite, the counterparty is right. In investment game, it's not a zero-sum. It's a positive-sum game. So I think a lot of things comes, so no matter how much you teach them, right? There are some people who are like, don't tell me all this. I know the risks. I want to trade, right? So there's only a certain amount of things that you can do, right? But the idea is if you limit the capital that they invest in the first 3-4 months, right? That is when they get maximum learning, right? And after that, probably I think it's up to them to understand whether it's something that works for them, it doesn't work for them, right? That is a realization that comes, and then people.
Are you putting any limits for the first 3-4 months manually, or some kind of gamification to have that limit for initial 3 more months of trading? How do you approach that problem?
See, even if you put limits, what happens typically is they will go to some other exchange. Today you want to invest. People need an instant gratification, right? If you don't find something in Swiggy, you go to Zomato and immediately order it, right? So the idea is to constant communication. We do almost webinars on every week basis. Like I do a webinar on Monday, Vikram does a webinar on Friday, right? You constantly communicate, and these people need some guidance. They look up to you for guidance, right? If message from the top is very clear, right? Look at what is happening in the equity market. The moment you open a Zerodha app, it says F&O traders lose money, 90% of traders lose money, right? So these kind of communications regularly, like you don't trade, you invest, because end of the day, for exchanges also in the long term, if these customers are profitable, we are going to retain them. If the customers are going to make losses, right? CAC is pretty high, right? I don't have to keep spending money, get new customers and lose existing customers. This becomes like filling a pot with a hole, right? If my customers are profitable, it's going to be extremely good for me in the long run also. So that is something that we focus, try to talk to them, right? Some people take it, some people don't.
Avinash, I want you to comment on India opportunity, but we know there are roadblocks in terms of growing both general crypto trading and F&O trading in India. Do you see a global opportunity being an exchange being operated out of India? Your entity might be somewhere else, but being a global product, and can you?
So actually, thing is that from a tech point of view, from an entrepreneurship point of view, there is obviously an opportunity. Okay, that Indian exchange becomes a global exchange. Okay, what is I think holding us back is regulations. If let's say I have to start a global exchange, do I start from India or do I start from Singapore or Dubai? Okay, and I mean there obviously friendly regulations, some kinds of predictability in the regulation helps, so to say. So opportunity is there. I think we'll need some support from the regulation side, but I think there is big opportunity sitting there. Not only on the exchange side, I think more than exchange, for me, exchange is a very, very simple business. The real world use cases of crypto, which we were talking about in the last panel, okay, that also whether those will emerge out of India or grow out of India or not. For example, one guy was talking about dating, Web3 dating app. Now the thing is that if it becomes successful, okay, does India has the right kind of regulatory support for enabling that business to grow, which at this point of time is not there.
Let's talk about regulation. I mean, in past couple of years, in different contexts, I've heard different Web3 startup founders say that they incurred a lot of loss or they had to shut down their startup. As a marketplace that kind of trades in futures, what is your regulatory risk there, and what do you want regulators to kind of look at when they are looking at this market? Right now, what are the limitations and what are the challenges in growing?
So basically, I think if you look at an exchange, I mean, an exchange or a real world Web3 application, they obviously needs to be regulated differently. Okay. Exchange is more akin to a financial institution, kind of, so it should be regulated as a financial institution. Okay. And there have been some progress, not enough progress, some progress in that regard. Now we are, obviously, we have to follow PMLA guidelines. We have to do reporting in terms of suspicious transactions. Tax clarity is there, although taxation is on a higher side. Okay, so there have been some progress, although slow, but there has been no or very little progress on the other side, on when you are actually building on a project, a real world project. Okay, what are the regulations which will be applicable to them? No one knows, and there has not. I mean, there is no progress there at least. I think the next trillion-dollar companies which will be coming up not on the exchange side. I mean, exchange is one business, okay, but the real innovation will come on the real use of Web3, which is not being encouraged, so to say. And
Sure.
those people are forced to go out of India.
Sure. Right now, because of the topic of the panel, I want to stick to regulations around trading. What are the challenges that you have observed that you're currently facing, especially when we talk about FNO and general crypto trading? What do you think regulators should look at very specifically? That, okay, this is something that we can rectify besides taxation, because that might not go away very quickly, given that the government and financial bodies in India tend to be more conservative in terms of uh, allowing people to take risks.
See, the current regulation, whatever is happening, it's more like a stopgap arrangement, right? Government is slowly moving towards regulating crypto, right? But by the time they regulate crypto, right? Before that, whatever they can do easily, they have done that, right? They got the ASCII guidelines on how advertisement should happen, right? Crypto is markets are risky, do you have no recourse, or like taxation and PMLA. So wherever they already had solutions, they just copy pasted it, right? From exchange perspective or from the ecosystem perspective, what really helps is if government takes a leap of faith and gives a certainty, right? This is what we are planning to do, because a lot of times you are guessing, right? What is government thinking about this, right? All this uncertainty, right? I think paraphrasing what Avinash said, as an exchange, my primary business I have to be based out of India, because I am doing the on-ramp, off-ramp. I cannot do this out of anywhere else. But look at any other Web3 project. Why do they have to go through this hard route when they have a highway, right? And it's almost like why large organizations don't take that risk, a smaller organization can take that risk. So a smaller jurisdiction like a Dubai or Singapore, it's very easy, right? For them to take that, it's almost an experiment, right? So India, I think as a regulator, they have to be a little bit bold, right? They should not come up with regulation when it kind of becomes inevitable, right? At that point of time, you lose that advantage, right? When you are at 70% or 60%, that's how startups work, right? You execute a product when you have like 60% or 70% confident, right? And then 20-30% happens after you launch the product. That's when you achieve the product market fit and everything. So regulators also should think like a startup, right? They have to come when they have like 60% clarity, right? And look at SEBI, right? Still they are coming up with circulars on a weekly basis, right? It's not going to, you don't need the complete solution, right? You will get the solution eventually, but before that, it's not the stringent regulations that are killing us or the positive regulations that are helping us. It is the uncertainty that is killing, right? You don't know if a particular, for example, remittance, right? There is a huge opportunity in remittance through crypto, right? Whether you can touch that or not, right? On-ramp, what are the clear guidelines, right? Whatever happened in Resurrection, all those things, right? The lack of clarity is a bigger problem than even they say you don't do this, right? It's really helpful for us, right? So in FNO and all those things, I think we have to be treated in comparison with whatever is happening in the equity markets, right? What we ask for is a fair treatment. There should not be regulatory arbitrage between two products or to jurisdiction. For example, international exchanges having a different set of rules and Indian exchanges operate in a different set of rules. So in those areas, if they bring parity, they treat it as a similar asset class, because end of the day, you look at an equity FNO and a crypto FNO, right? There are some areas where there is differences, but more or less I see it as the same product, right? So why not have a equal treatment on both?
Avinash, Arjun touched upon SEBI. I want to continue the thought that he started, but I also want to kind of point out that SEBI now has rules around equity FNO that they are mulling that, okay, you increase the lot size, you put restrictions around what kind of markup that you get, and you either pay the premium upfront, things like that to kind of curb the risk appetite in general. How do you think that kind of translates to crypto FNO? Do you think you need a different set of rules? Those set of rules kind of make themselves good enough for crypto FNO?
So I think three things here. Number one is that whatever those rules are, okay, there should be at least clarity in terms of that these are the rules of the game. So that everyone knows that these are the rules of the game. So for example, on the taxation side, although we are saying it's unfair or it's higher side, but still clarity is there. Okay, so that kind of clarity should come that that these are the rules of the game, and you play with these rules. That is one. Second is that I think what will help is to have a separate regulator. This is only one part, that whether it should be 20x, 50x, 100x, what kind of user profile should be there, whether we should have some restrictions in terms of, let's say, the income level of the person who is allowed to do crypto or FNO. Okay, if there is an independent regulator who is regulating crypto, that regulator will be able to balance both the industry and as the, from a risk point of view, what should happen. Okay, so clarity, independent regulator, and I think third thing which is still missing is customer protection. Okay, we have guidelines towards AML, anti-money laundering, PMLA. Okay, we have advertising guidelines, but from a customer protection point of view, I think enough is not done. And what happens is that as an industry, customer faces a problem obviously, but then industry also faces a problem. If there is a bad apple, okay, and that bad apple is not regulated by anything, and they do something, and obviously as an industry we face problems saying that, okay, your brother or your co-industry companies has done this, which obviously results in customer loss for the retail customers. So I think these three aspects we should be working towards.
I want to touch upon the independent regulator bit. I've fairly followed the policy bit of Indian internet and Indian technology in general. Independent regulators are never technically independent. So how do you kind of have that power balance in general? Because government will give enough power that it feels independent, but it is not independent as such. And the second thing is to set up an independent regulator, go through all the hoops of selecting people and making rules in place. That takes a long time. We have the DPDP Act, but we don't have the rules at all. There is no committee around it anyway. So how do you think, what is the best approach there? Do you agree with him? Do you have a counterpoint to that?
See, the first problem is you have to recognize this is not an easy problem, right? There is one side, there is tech, then other side, there is money that's being involved, right? So, and there is a trading part, right? So there is something that comes under SEBI, there is something that comes under RBI, cross-border, stable coins, things like that. And there is also the technology part where Mehta comes in, right? You want to have, if this becomes the core technology, like the next setup, internet
consumer protection, like you said, the consumer.
So that is like the fourth department, right? Technically, at least RBI takes care of consumer protection in banks and fintech. SEBI takes care of consumer protection in the securities part, right? So what right now is happening is PMLA, FIU, it's clear, right? But who will be the core regulator? So I think there is actually no real right solution anywhere. The reason why we are bringing independent regulator is there needs to be a lot of focus, right? And crypto is evolving very fast. 2018, before we didn't have to have DeFi. 2020, we had this NFT wave, right? Now RWA is becoming a thing, right? So if you have a regulator that is focused on this, you will be able to react faster, right? Rather than trying to force fit existing solutions and try to, see, this is like when internet came, right? What did you think? Is it like a telegraph, right? Is it like a postal system? What is it? It is something new, right? First thing we have to recognize it's something new, right? And of course, RBI will definitely want to have a say in how much money is going in, going out, the stable coins, right? SEBI would want to have a say because you cannot have two different, like the equity FNO and this thing should be treated at least in a similar manner, right? If there's a regulatory arbitrage, if these people are a little bit lax, right? You will see all the money moving from there to here. So the participants in the SEBI ecosystem, they are going to make a complaint, right? And vice versa. So I think Gift City is a beautiful example where they have a Gift City regulator who is going across jurisdictions, right? There is something that SEBI is involved, there is somewhere RBI is involved. I think that is a beautiful example that they can take it from, but there is no easy solution, right? Government typically does an easy solution. Typically, they try to see how I can extend the existing things rather than creating something new, because creating something new from scratch is a very difficult problem for the government, unless there is a political will, right? This is an important problem, like for example, what is happening in Dubai, right? They want to be positioned as the Web3 economy, right? They are saying that my next catalyst of growth is coming from this particular area. So that kind of political will, if it is there, like how government is focusing on startups, right? Or silicon chips, for example. If that kind of political will is there, then it's easy to happen to have an independent regulator. If not, I think the good part is a few months back, SEBI expressed interest in regulating some part of the economy, right? We are really, really happy and existing, because earlier it used to be that it is not my jurisdiction, it was not your jurisdiction. Like RBI and SEBI were saying, this is not money, so it doesn't come under you. SEBI said it's not security, it doesn't come under me. When US, the opposite was happening. Both SEC and CFTC are saying, it is under my jurisdiction, you don't come into this, right? So finally we see some baby steps towards that. But I think end of the day, Ministry of Finance, Mehta, they have to take this call. I think it is better if there's an independent regulator, because they'll be much more informed about the things that are changing very fast. Rather than having one person in the whole department looking at crypto, we have one department exclusively looking at crypto. It's better for the ecosystem, investors, consumers, everyone.
The last panel touched upon this point about Trump coming into power. There is a lot of hope that Web3 ecosystem will flourish because he has promised that, but I mean, it's Trump, so can't do anything about that. Do you think that would have impact, one, the regulation, the government change in the US and I would say institutions like BlackRock and other financial institutions kind of taking a look at crypto as a viable asset class for themselves? Do you think that will have an effect on Indian crypto market, both in FNO and equity, and in general how even financial institutions in India look at it? Or it's just a false promise sandwich that, okay, this will happen, so we hope this will happen, and then we hope this will happen?
So I think two parts. One is that I think it will have a positive impact if, let's say, US takes a lead in crypto and Web3 space. But I think the second part is that I think we are big enough as an economy, as a society, that we should no more be looking for validation outside. Okay, I believe that Web3, Bitcoin is, I think, the technology of our times, so to say. And as a society, we have to not only see that how do we adopt it. I mean, how do we become leader in this? Okay. And the job of the regulator should not only be just to regulate. I mean, it's like, how do we promote, how do we become like a hub for crypto innovation, Web3 innovations? So that's how I think we should look at it. But I think, yes, it will help.
So I think it definitely helps. If you look at most of the financial products, right? Not just financial products, even electronic trading or like credit card, all those things, most of the regulations happened outside India before they got into India, because we were a little bit slow on the technology or product space, right? So I think we have a history of looking up to them in terms of what regulations are happening. And even if you look at G20 statements by government, right? They're saying we want to do this as a framework across countries. We don't want to individually regulate. So they are looking to see a common regulatory framework across countries. That is what the consensus they are trying to bring. And US being the world's largest economy and where largest amount of money is, right? It kind of dictates where the space will move, right? If there is going to be future for crypto, right? I think it kind of becomes inevitable that Indian government end of the day ends up regulating, right? And there is also a saying that India starts slow, but they leapfrog. Like how we directly went from agriculture economy to services economy, or like how in terms of mobile payments we are leading the market, or even the stock trading, right? We are growing at a very fast pace. China is not there, right? We have overtaken China in a lot of these aspects. So I think once there is a clarity that they need to regulate, then there will be a lot of push in how do we become number one, right? So I think that one step will take us 10 steps.
Got it. Quick last prediction. Say if we meet a year after and talking about the same subject, keep in 20 seconds. What do you think will happen in next year?
What will happen in next?
Next year, if we are again here in 2025 talking about the same topic, what we might be talking about?
So I think what will happen is that we will be much closer to the regulations. Hopefully, the regulations will be in place. That's my hope, at least.
Arjun?
We'll be closer to regulations, but I think we may not have the regulations. So probably same topic we'll be having. We'll have a.
Awesome. Thanks a lot, folks.